Hello, everybody. Welcome to my new trade recap of this week. This week was the last week for me. The market was not giving that much for opportunities because Friday there were a lot, but I don't trade Fridays because of the manipulation and the closing of end of the week. So I don't trade the Fridays. So the first trade that I took was Euro AUD. So we had here a weekly bullish candle close. We touched here the weekly highs here, previous highs. So yeah, that was the reason the sellers kicked in from that point. But yeah, we had a weekly bullish candle close here, that one. We had here also that very big push to the upside from that point. We had here kind of bullish M here. We could go to the institutional candle back here, but yeah, we had that weekly bullish candle, so we could look for a daily bullish pattern. And what I also did was I took my horizontal backline at the bottom of this blue wick from that blue weekly bullish candle close. And what I could see was that we had here very nice bullish pressure coming from these zones. So this was acting as support here. Support again, nice resistance, very nice supply and demand. So if I look further, here again, support, resistance. If I look further, this was also some kind of resistance support here. So it's a very nice, well-respected zone that I saw. So if I look now to the daily, because the weekly is clear, the daily, what I saw on the daily chart, so I will delete that. So on the daily chart, I saw here that we had here that daily bullish M, and what we had after that, we had here the same highs. So we expect the same lows. We had a kind of break of that institutional candle higher low, but this was not the clearest one. We didn't have the full break of this institutional candle here. So I was looking at the natural M that could still play out. So if I delete that here and I will go to the 4 hour now. So I just took my Fibonacci from the low here to the high because we have a natural M, same highs, we expect same low. So we drew the new Fibonacci like that, magnet like this, my daily zone at the daily lows. And then I went till the 4 hour chart. And on the 4 hour chart, we came to the downside and we had here already a touch. And then we had within that daily touch, a nice pattern within a pattern. So we had here the first leg, second leg, the third leg, and we had a break of this lower high. So we could look for a reversal pattern. So we have that bullish M with the inverse head and shoulders. The inverse head and shoulders is the bigger pattern, so I will take it on the inverse head and shoulders. And then we had here shoulder one, had shoulder two, limit was set. We had here kind of fib completion, I guess. If I took the Fibonacci from here, the high to the low here, we had the minus 68 here, aligning here, or that kind of bearish W here you could take, yeah, minus 27, minus 68, it was sitting here. So yeah, a lot of indications that we could go to the upside with a pattern within a pattern on the 4 hour. So I took the limit and yeah, we had the minus 1%, nothing to do about it, just move on to the next trade. Yeah, it was a good trade followed by the plan. So the next trade was GBPJPY. So if I look to the weekly chart, what we had a very impulsive weekly bullish candle close. And I could also see here a kind of support zone sitting. We had here resistance, 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 and potential support. We had a bullish driver because we broke these highs. We broke it. So we are in a bullish driver. So yeah, then if I look back, we had here also some support. If you look like this, we had here some support, support, and then here the resistance. So this could be a nice supply and demand zone to hold the price up. So if I go now to the daily, because we had a weekly bullish candle close, this is clear for me. I went till the daily. And on the daily, what could we see on the daily? We were above that weekly supply and demand zone. I drew my horizontal black line at this lows for the false break potential. And what we had, if I look closer, we had here that bullish M. So we had here that first leg, second leg, third leg, fourth leg, and a potential fifth leg to the daily minus 27. But we didn't do that. So I just marked my daily zone of interest from that whole candle of the institutional candle. So between all the blue candles, you have one red candle. It's working like a magnet, and that's what the market likes to reverse on. So I drew this daily zone of interest here at this candle, the whole candle. So if I go now to the 4-hour, you can see that I was waiting for a pattern. So the price came back. We didn't have here a pattern because this was not closing in our 61.80. And then we were closing the first candle, second candle, third candle. Then we could potentially here had already a deceleration here, like this. We could have here already the first deceleration for the first trade, but on that time I wasn't looking at the charts, I was working, and then I had the second opportunity because this was still valid, and then I took this deceleration. So we had here the first, second, third, fourth, and yeah, we went till the downside. So no problem, it was flowing by the plan. So yeah, nothing to do about it. Then the next trade was NZDUSD. So yeah, on the weekly, we had here our multiple bullish candle closes. We had here one impulsive and one less impulsive. The main driver is still bearish because we had here that weekly bearish move. But yeah, the first structure that we have to have some possible short momentum is this one. So we had still some space to the upside. And we were at this monthly lows, I guess. Yeah, here we were at this monthly lows. As you can see, if I drew it like this, you can see that this is a very nice zone where the longs kicked in from this point in 2003 and here 2008, and here the nice bullish impulse to the upside from 2020. Yes. So this was a very nice zone to take along on. We had also a monthly bullish candle close. So if I go back to the weekly bullish candle close, I can look for the daily. And what can I see on the daily chart? On the daily, I saw here a natural M. We have here the same highs, so we expect the same lows. What I also did was for a potential false break, I drew my daily horizontal black line at these lows for the potential break of these lows, and then I could see a potential pattern if I have one between the lows and the horizontal black line here. So if I go to the 4-hour, you can see we achieved here a pattern in the form of a deceleration of first candle, second candle, third candle, fourth candle, and yeah, we went also to the downside. So yeah, just following the plan. It was following the plan, and yeah, we went to the downside minus 1%. So then the other trade, EURCAD. If I go to the weekly, this was a better trade for me. So if I do it like this, you can see it better. So you have here a weekly bullish candle close. The only thing we needed to be careful was we were at this weekly highs here. This was our last impulse, so our last leg impulse, this one. So that you can see it as a whole structure here. This were this week, so I can count this as one leg. So this was our previous touch of the lower high here. So that was the part we needed to be careful for. But on the other side, we were making here this kind of bullish M for potential more upside momentum. I think if we had a minus 27 fib completion, I will see from the low here to the high. Yeah, we had here a minus 27 fib completion. So it's aligning with the weekly highs, minus 27, bearish orders kicked in from that point. So it was a more dangerous setup to take. But yeah, we had a weekly bullish candle close. I can look for more upside momentum. So yeah, I went to the daily chart, and what did I see? I saw here that bullish M here. I drew my daily zone of interest at this lows because this 61.80 wasn't respected. So I drew my daily zone of interest at this daily lows. Then we received here a pattern. And if I go to the 4-hour, you can see if I delete this one here like that, you could see we had here an inverse head and shoulders. So I adjust it like this. You had here an inverted and shoulders with break. So if I zoom in, you can see we had here that shoulder 1, this head, and then a shoulder 2. From the moment we broke this, I just set up my limit. Maybe my stop loss was too big because I was looking to the daily minus 27. So if I go to the daily minus 27 like this here, it was for around 5.6%. But if I just took the rules of the inverted and shoulders and yeah, a little bit below the 100, take like 10%, it would be okay. 10% like this, it would be enough. 30 pips. Yeah, then I was running around minus 20, minus 27, 1.8%. So I could took here some partials then if I adjusted it better. And this was then running 1% here. So now if I had the right rules and I adjusted the right rules at that moment, I had 1.8%. So I could take here 1/3 out because at 1%, I will not take that much of partials. I was just setting it break even. So yeah, I could take here 0.5% netto, maybe the half of it. So or maybe more, 80% because the weekly was sitting against us. So this could be a trade of 1.3% netto. So this was a mistake from me personally. So the last trade AUDUSD, this was a nice executed trade. So if I go to the weekly, I will just refresh it like this. So on the weekly, we had here the weekly multiple bullish candle closes. So we had the first one very big bullish candle close, and then the second one was nice. I went to the daily chart, and what I saw on the daily chart, okay, we could also see this as one leg because the wicks touched this low, so we could see this as one impulse. So I drew this daily zone of interest to see, okay, we are at an important zone. So we need to be careful for that. Sorry. But I saw we're also, okay, we are making on a daily this bullish M here with that nice institutional candle. I took that daily zone of interest on the whole body. And if I go now to the 4-hour chart, you could see we touched here our zone of interest and then we broke impulsively to the upside. And what we had here was that shoulder 1 had shoulder 2. I was setting my limit. From that point, we broke this lower high here. So we went to the upside. From that point, we just went to this 100. I just took in count that, okay, we can touch the 100. And I took my stop loss a little bit below that to have enough RR, risk reward, to my 4-hour minus 27. And we went then impulsively to the minus 27 very quickly. And then we went very quickly to the downside. It was in a few minutes, it went just -1 on my break even. And if I didn't do that, then it was a -1. So it was very good management of me, very exactly on the minus 27 4-hour TP we reversed. So yeah, trading is just following your rules very carefully. And yeah, just do the things you need to do over the week, over the weekend, and you will come there. So yeah, keep on doing what you do and see you next week. Bye, guys.